Welcome to Campfire Academy. I'm Andrew Craissati. Today, we're talking about communications in between the announcement of quarterly results.
What are the dangers of going silent between earnings calls?
So let's start off by asking ourselves, what are the risks of limiting communications to just 4 times a year? In other words, when you're announcing your results for the quarter. In the old days, there was no risk because the world moved at a slower pace. Investors were less immediate in their need for information. Decisions were more gradually made by institutional investors. So a quarterly flow of information was fine. But today, with large numbers of platforms around the world aggregating financial information, both retail and institutional investors are making immediate decisions. Do I buy? Do I sell? Do I consume all of the research on a particular stock and then make an immediate decision? So the world is now a world of immediacy and news that is polarizing in that some of it is fake, some of it is factual, and there is often a challenge in differentiating between the two forms of news. So in today's world, being silent is by its very nature dangerous. Also, you want to reflect on the idea of your quarterly results are typically quite narrowly defined. They are exactly what they sound like they are. It is a discussion on your financial performance over the previous quarter. But what about those stories that need to be told that are important to the marketplace, but aren't necessarily just about your financial performance? Maybe there is a discussion about competition. Maybe there has been a development in your landscape in which you operate. Maybe the government has changed its policy on legislating or regulating your industry. Maybe there is a new aspect in society called artificial intelligence that needs to become an important part of your narrative. There are many developments that take place in between the announcement of your quarterly outcomes. And more important even than that is, are you foremost in the minds of your investors or in the minds of your prospective investors? How often are they thinking about you? Maybe they're weighing up a decision to invest in 2 different companies, and you're not doing enough to engage with them to keep you foremost in their mind. So going silent or being silent has a new level of risk today that has never really been the case before, and certainly not to the same degree. So it is increasingly critical that you understand the importance of how you build a cadence of storytelling that is around who you are, what you do, your customers, your technology, your workforce, your growth, that is more than a quarterly discussion.
How often should companies communicate with investors outside of official reporting cycles?
So being silent for 2 out of 3 months, obviously, as we've just discussed, is quite dangerous. Equally, though, you should ask yourself, how often, therefore, should I be communicating with my investor base or with the market? There is no single answer. The most common answer is monthly, and that really has its origins in the world of private companies, particularly private companies that are backed by either private equity investors or venture capital investors who are used to the idea of reporting monthly to their major shareholders and key investors. So it is simply extending what the private business world is already used to in terms of their habits. Monthly also allows you to build a cadence and a regularity in your engagement with your investors. Building an audience and building a loyal audience to your communications comes out of consistency and regularity. knowing that the first Monday of every month is when a public company publishes its latest audio content through Campfire is an important moment for your audience so that they can consistently come back and remain loyal to that flow of content. There are situations where you will want to do it more frequently. If you are in a fast-moving ecosystem, if you are a company that is going through an intense cycle of developments, you might be in crisis. You might be in a highly competitive situation where you need to flow information more regularly. But you can create, if you will, distinct brands of content. You can have, for example, a monthly flow of corporate information, but then you could create a separate branded piece of content that is dealing with something that is perhaps more temporary in nature or more seasonal in nature as well.
What types of stories or updates make sense between formal disclosures?
So if you view the quarterly results of your organization as a sort of formal moment or a statutory moment where you are publishing information for the benefit of the market, and whether that's reflected through your existing shareholders or prospective trading shareholders, the information that is supplemental to that is what you want to focus on in between those quarterly announcements. So I typically refer to that as context building. So what is it that you're not getting across in a formal, conservative document that is still appropriate, but helping to bring your story to life? That is where you're going to be talking to your marketing director, to your product team, and your customer success executives. So you may be talking about happy customers. You may be talking about programs that you're developing for your technology roadmap for the future. You may be talking about a new version of software that is coming out. You may be talking about developments in your industry. You may be talking about your reaction to something that has taken place. Perhaps it is the announcement of the government budget. Maybe it is the change of administration in a government. But it is the context to your business that you are really talking about. Imagine a world where we could actually experience an interview with a happy customer, hearing firsthand why they love your product, why they keep buying it, why they are loyal to your brand. That is relevant to an investor, and it will help an investor think about the fate of their decision as to whether to buy your stock, hold it, or sell it. So, simply put, what you talk about in between your formal disclosures is not repetitive of your formal disclosures. It is supplemental, and it is building context or color to what then follows up to 4 times a year.
How can teams avoid crossing into selective disclosure when communicating in between quarterly earnings?
So once you've made a decision to develop a narrative that is in between your formal disclosures or in between discussions on your financial performance, you can't be selective. You have to be consistent in your approach. So one of the things that you may want to do is to design a calendar of content. And you may want to think about a variety of stories and thinking about them ahead of time so that you can plan out each of your 4 quarters and you can develop the stories that you think are the most relevant to tell, whether driven by seasonality or whether driven by some other factor. But selective disclosure is your enemy here. You want to be consistent in making sure that you are talking about stories throughout the whole year and that are providing, at a high level, objective way, a much larger story that is curated and that gives full color to who you are and what your business is.
Are there any data or examples showing how mid-cycle communication can impact perception or stability?
So how do you measure the impact that is created by more regular flow of information? It's obviously difficult because the ultimate measurement of talking to your investor is what they do with their decision to either buy your shares, hold your shares, or sell your shares. So that is the ultimate measurement of the impact that you are creating. And it reflects itself, obviously, in your share price as the ultimate test. But you will want to work with market makers as part of your strategy in building your editorial approach. In terms of how perception can be altered, the best way you're going to see this is ultimately through media. So how the news cycles are picking up on the stories that you tell and how they're actually therefore helping to build influence or impact. While I can't go into too much detail to talk about specific clients of ours, most of the impact that we see overall by enhancing the frequency of audio content is really in the behavior of the audience. So we see it most frequently in the growth in an audience and the loyalty of that audience. So they keep coming back. They keep listening every month. They're not just simply churning away from the content between 1 month and the next month. That is, for us, probably the most valuable indicator that we see.
What practical rhythm or content cadence would you recommend in between earnings calls?
So how frequently should you create content if it is in between quarterly results? I would say that the default answer is monthly. That gives you enough time to prepare the content each month. It's not overly frequent, and it doesn't put too much pressure on the audience to either skip episodes or miss episodes unintentionally. So a monthly default approach would be preferred, unless you are engaged in something that is highly time sensitive or creating headlines in the news, in which case you might need to take a more frequent approach, such as a weekly approach, albeit temporarily.
What should listeners be asking themselves as they put some of these insights into practice?
So for those of you who are listening and who are thinking about what your strategy is in between quarterly results, perhaps the most important takeaway from this session is to think about context and to think about what is it that you're not discussing in your quarterly results announcement. So yes, you've got a structure by which you discuss your business 4 times a year. But let's think about what is it that we want to populate in between those 4 sessions that adds nuance, adds context. So thinking about customers, technology, business developments, key hires, key moments of business development across the organization. This has been Campfire Academy, an Auddy production. To learn more about how you can capture investor attention and stay top of mind, visit Auddy.com.